Hey, welcome to the closing beat, everybody. Happy Monday. How's it going out there? Hope you're having a good day. Welcome to our show. It's called the Closing Beat. We're just a quick stock market update show. We go over the good, the bad, and the ugly for the day just to let you know how things are going. It's a lot of good out there at the moment. So we'll cover that along the way. We're financial advisors at Jazz Wealth. Hope you'll check us out at jazzwealth.com. And do appreciate you watching. I appreciate it. Our jazz artist of the week is going to be Dave Brubeck. We're going Dave Brubeck this week. A song called Blue Rondo a la Turk. And if you're a drum corps fan, it's also going to be the Blue Devils 2003. If you care, go check that out. Go for that. Check that out. But otherwise, let's get started here. On the screen, you see the stock market. Another 1% day. You guys are starting to disappoint me. We're going to go over this here a little bit and kind of talk about where the markets are at. Actually, let's just dive into it. You can see 1% gains across the board. The Russell 2000 was the strongest of the day. We'll go over the charts, take a look at that. I will pull up the Russell 2000 above the 200-day moving average. It's now down only 7.9% on the year, which it's the one of only two major indices to be down on the year, thanks to the S&P today. Healthcare and real estate were your biggest contributors here today for the Russell 2000, so looking good over there. And the NASDAQ was actually negative at one point. Did start the day down, but finished, it recovered nicely from its declines there. Now it's up 10.6% year to date, also at all-time highs. The S&P is even for the year as of today. Actually, a small positive, a small pop there. So we've recovered all of the declines for the year, now going back on positive. It was one of those days where the risk areas were positive. You know, some people say cyclical. They'll say the cyclical areas were strong on the day. You've got a bunch of stocks in the news. We'll just trigger through a couple of them here. Alaska Airlines, and actually all the airlines across the board there did good. Carnival Cruise, great day, 15% gain on the day. These are stocks that nobody wanted anything to do with just a little while ago. United Airlines, another airline that was strong on the day. Harley Davidson, people out there excited about buying motorcycles, and everything is looking good there. Here's the problem. The average stock is now trading 12 months. I mentioned this on Monday, 12 months above 12-month expectations for analysts. It's actually trading now 60% beyond what any analysts had predicted as far as the year's gains for individual stocks. So that's the average stock. There's a 60% spread. There has never been a 60% spread in the history of the stock market between what analysts had priced in or expected for the year and what is actually happening. It's never happened that it's been so wide there. The average stock in the S&P is now trading 55% higher than the March 23rd lows. If you look at the S&P 500 and you're brand new to this here, March 23rd is sort of known as the virus low. That's the day that we actually made a low, all that nastiness stopped, and we started reversing course. So we do a lot of data points from the March 23rd low. The average stock is now up 55% from there. The average stock only fell 39%, by the way, so it gives you an idea of the strength of the rally there. A couple things I want to point out. I'm going to teach you something a little different today. I did this for our customers over the weekend in the Notes from Jazz, but I thought this was really important, so I want to share some of those slides with you guys today, and also kind of highlight our upcoming membership site where we're going to be sharing research and a lot of the data that we share here. We're just going to share it on the membership site for those people that can't be customers. Let's dive into it. There are now 98.6% of the S&P 500 above their 50-day moving average. We use the 50-day moving average as a guideline for how extended things are in the short term or how weak they are in the short term. The average stock is now up almost 16% above its 50-day moving average. So you already get the feeling like, man, maybe that's a little overdone. That's happened kind of quickly there. So be very careful with that. 82% of the S&P 500 is considered overbought. What is overbought? How do we define that? Well, the industry defines overbought as one standard deviation away from the 50-day moving average. I want to share that with you here. Here's a chart of Apple. This is a couple days old now, so this is not the most new thing we have here. But Apple is now almost two standard deviations away. But what you're seeing on the charts here, the blue line, if you go down to this guy here, the blue line is the 50-day moving average. In any chart that I share with you, the blue line is always going to be the 50-day moving average. Just get that out of the way. Whether you're looking in the dashboard in the dojo and you're typing up an individual stock or not, 50-day moving average is always blue. The line above that is one standard deviation away from the 50-period moving average. Without going into like really geeky math stuff, a really simple way to look at this is go, well, what is one standard deviation? What does that mean? It basically means that well, we have 80% of the stocks above that point right now. That's the point I was trying to highlight. But it basically means that stocks spend about 30% of their time above one standard deviation away from the 50-day moving average. In other words, it doesn't spend the majority of its time up there. It's usually lower or floating around in some area or even lower, right? So that's the first one. So you got Apple trading one standard deviation. After the last couple of days, it's actually getting a little bit stronger there. That's considered overbought. You would say, from a technical perspective, Apple is overbought. If you look at something like Equifax, we'll go over to that one. That is above that second line. The second line is the 2 standard deviations away from the 50-day moving average. And the way to look at that is to say that when a stock is 2 standard deviations or further away from its 50-day, it spends only about 5% of its time up there. So the rest of the time it's lower. 5% or more, could be higher, right? But other than that, it spends 95% of its time lower, down here somewhere, or under the 50-day, or close to the 50-day, or something like that. So 2 standard deviations is considered extremely overbought overall. So we've got 82% of the stocks in the S&P 500 above 1 standard deviation. In other words, trading in areas that it normally doesn't trade at. That is the 4th highest reading in the last 15 years that we've ever had. Give you an idea of the level of overbought there. 83.6, which happened last week, is the official record, the highest ever that it's ever been there. So be very, very careful when you look at stocks that are very extended and ask yourself, do I want to buy a stock that is trading at levels that it normally doesn't trade at? In other words, extremely overbought, or do I want to wait, right? And unfortunately, a lot of people got really excited today and traded at levels that we just don't hang out at. We just don't go there. It's just not something that happens. So it's exciting, I get it, but it's something you want to be very, very careful of if you're looking, if you're looking to start new trades here, right? The stock market today went higher literally on nothing. There was no news, no economic news, no nothing. It was just momentum, just kept going there. It was just kind of everybody getting excited. So that's what you got there. Hey, today on our FinTips video, we covered dividend stocks, how to build a dividend portfolio. We sort of expanded on last week's and then included some of that data for you to cover for our mistakes last week there. Wednesday, we're going to do what if you're 42 years old? Specifically, how much to invest, where should you invest it, the dollars, where do they need to go, and how would you lay that out so that you can hit a retirement goal there of $50,000 a year in retirement spending money. And then on Friday, we're going to have some fun and we're going to cover thematic ETFs. I'm going to go over 4 thematic ETFs. In other words, just unique niche kind of ETFs that you can focus on. And in our Wine and Wealth class this week, I think what we're going to focus on is what you should do if your 401k plan at work, if your company cuts the match. What do you do with that? Do you adjust? And if so, specifically, how do you do that? So we'll cover that Thursday for our customers. All right, let's go over to the sector breakdown here and take a look and see what we've got for the day. Every single sector was higher on the day, thanks to basic materials. So the materials sector squeaked out a little bit of a gain there right towards the end of the day, added 0.13% on the day, which makes every single sector higher on the day on no news. Nothing. Energy moved higher again today. A lot of interesting things going on in energy. This was the strongest stock of the week, or strongest ETF sector of the week last week. And it was also the leader again today. It was the leader on Friday too. But ExxonMobil up 3% on the day, headed back to the 200-day moving average is one of the reasons. Occidental Petroleum, this was that second tier breakout that we talked about last week. That one's looking really good. Also looks to be headed back to the 200-day moving average. Marathon Oil, you may remember, we'll cover that in just a little bit. Also had a great day, 15% gain on the day. The wildest one of all, Chesapeake Energy. CHK is the ticker symbol, up 181% today. Yep. All in one day. Look at the volume off the charts there. Just incredible. So I don't know what everybody's doing. I don't know what you're buying a company for, but everybody got excited about that one. So that was your leader today in terms of the sectors. Utilities and real estate got a break today. Utilities above the 200-day moving average there. Also, the Fed said that they're considering, well, the reason why is because of bonds. So if you look at bonds took a break from their downturn. Rates had been moving higher over the last few days. Remember, when I share a chart with you of bonds, as prices move lower, the yield is going higher. So today, with prices going higher, yields were going lower. That's essentially all that means. And because yields were going lower, that benefits the interest rate sensitive areas like real estate and utilities. And so, for example, on utilities, getting above the 200-day moving average, that was one of the reasons. The other reason was the Fed actually said they're considering buying enough treasuries where they could actually force the rate to stay at low rates, force interest rates to stay low if they do get out of control. Remember, when they adjust interest rates, that's what they're adjusting for banks. The prices and rates in the market can move around. So they're considering about physically forcing that. And I don't know how we can give China any grief for manipulating currencies and stuff if we're going to do stuff like that. But that's a side topic. Here's real estate up above the 200-day moving average. That had a great day as well. Technology was at the bottom of the well, basically the bottom of all sectors besides the materials for most of the day. It added 0.5% by the end of the day there. That, believe it or not, that sort of put a cap on the market's rally today, largely because of semiconductors. Semiconductors like Intel held back just a little bit today. NVIDIA also held back just a little bit. Apple in the tech sector did eventually get to new highs, but it was down most of the day. And if you look at semiconductors, they just had a great run. There's nothing wrong with it. They just had a good run. They've decided to pull back there just a little bit. That held us back just a touch. Financials back to the 200-day moving average. I know a lot of you are happy about that. Up 2% on the day. Had double-digit gains last week. So did industrials, and that momentum is continuing this week as well. Today would have been an exact replica of Friday in terms of sector performance if it weren't for that rate drop, which caused utilities and real estate to kick in there. And one thing I want to highlight here, the kind of things that we're going to cover on our membership site, if it's something that interests you, like I said before, we want to hire a developer. And rather than just do a bunch of marketing and do all this stuff to try to build a business, what I figured is if I could offer you guys something that you seem to find interesting, then maybe that helps us raise a little money to hire a developer. So full transparency there. That is the reason we're doing this. It's not because we're trying to make a bunch of money and all go buy boats and stuff. We want another developer to make all of this stuff even better and keep improving. So one of the things and the types of things that we're going to focus on is a sector tradable or is a sector an investment? So let's go over and take a look here. We're going to go over to XLF. So here's a chart of the XLF. Over the last month, financials we know have been building momentum. We've taken a look at that, but we want to be careful not to get too exposed to financials. Financials are a tradable sector. They are not a sector that you invest in any serious, significant way. You might have a portion of financials in the mix. You might decide to have some percentage that you're going to play along with there, but you are not going to go 50% in financials with your retirement, right? It just wouldn't make sense. The reason for that is because overall financials tend to lag the overall market. They're a good crutch. They're a good supporter of the overall market. But if you were to invest too heavily in financials, you would actually be dragging behind the broad market. You'd be awfully disappointed. And all you index fund people would say, why not just buy the index, man? Well, this is your reason why. Financials are something that you trade. They are not something you invest in. And if you're wondering, well, if I invest in financials, how far do I go? The magic number is 11%. You never commit more than 11% of 401k, an IRA, whatever it may be, in the broad, large financials. You can have other financials, regionals, REITs, things like that, that would be categorized as financials. I'm talking about your Goldman Sachs and JP Morgan, the big banks, regions even, like the regional banks as well. So 11% is the max that you want to go on that, because other than if you go too high, you're going to start dragging behind the market. And so this was just kind of an illustration there to show you, if you have financials and you're excited and you've been kind of checking out what's going on here, we'll go over XLF real quick. You see that and you're like, oh my God, this is awesome. They're starting to rally back. They get a little resistance. That's fine. But you just don't want to get too overly committed there, or you'll notice your portfolio start to slow down. We do a lot of 401k reviews for our customers, and I always make a point to kind of, if they want to go financials, I try to make a point to say, no, I get it that it's exciting, but we don't do that for the long term. If you go too heavy, you're going to get in trouble there. All right, let's move on. We got crude oil. Crude oil gave back about 3.5% on the day there. OPEC's going to extend their productions there. That was a buy on the rumor, sell on the news type thing, because they've been flirting with that idea for the last week and a half. Today that became, or overnight that became official, or I guess you could say over the weekend there. Gold added $22, up 17 to 17.05 an ounce, bouncing off the low end of this range. Pointed that out to you last week as it fell down there. Good support area, good area to maybe take a look at some short-term gold positions, or if you're a trader in gold. That so far is going really well for that one there. And that's basically all I have for the sector breakdown. We'll move on to your technicals. Let's go take a look at what we've got. Technically, you have 18 new highs on the day. That's 7 sectors overall. They all pretty much closed positive on the day. Let's see. Oh yeah, Skyworks was even down on the day as well. So not everything was positive. Skyworks did pull back just a little bit, but you had a lot of good news in there. Amazon hitting new 52-week highs as well. RBC upgraded them to $3,300 from $2,700. So you really, I mean, you got look at this. You gotta go way out here. RBC basically says 3,300. That's your target now for them over the next 12 months, by the way. But you see how far you got to zoom out to get to that. It's kind of, it's rather impressive. Anyways, other new highs today, you got Kraft Heinz. This is awesome. It's been a bit of we have a very, very small position in this in a couple of our funds. Been a little bit of a thorn on our side. Obviously, today we're very happy, and that's making new highs over the last 52 weeks and even a little bit further than that if you want to go further. There were no 52-week lows on the day. We're now approaching, going on 4 weeks where we've had no 52-week lows. I think a lot of you are happy with that. And then we'll take a look at a few of the technical stuff in here. Amgen. This is where you start cleaning up your watch list. Remember we talked about last week preparing a watch list, looking for areas you'd be interested in buying stocks. Now that all of that has come true and those stocks are starting to rally, you're looking at areas to take profits and cleaning up your watch list of the stocks that maybe didn't do what you hoped or had yet to come down to the area that you were excited about. Amgen, we talked about coming down to the 200-day moving average. It's starting to move up off the 200-day moving average, and now because of that, you're going into profit-taking mode. You scratch it off your watch list. You look for areas that you want to take a profit, whatever your trade may happen to be in these things here. Win, you got Las Vegas opening back up, Southern Nevada opening back up and everything. Win higher by 7% on the day, above the 200-day moving average. You got to look at the 200-day as a profit-taking area. I'm not telling you like what to do with your trade or whatever, but know that traders are going to look at this area right here between 107 and 109-ish to be taking some profits in the short term. So if you peel out of your position, maybe now's a time to be considering that. Vertex off the 50-day moving average. It's trying in an uptrend here. Nice pullback inside of an uptrend, starting to give you a little bit of a rally there. Not so much exciting today. Healthcare has been out of favor, so you know that that's been lagging behind. Nothing wrong with it. There's nothing weak about it. This is just your relative weak area, and so because of that, the stocks in this area are going to be relatively weak. And then the oil breakouts that we talked about last week, your Occidental Petroleum, Apache and Marathon, all of those a lot better than I thought they would have done. They're all heading back to the 200-day. Every comment I just said about Win, you're going to use the same comment here for the oil stocks. Back to the 200-day, expect that to be a profit-taking area. Some have further to go than others, but Marathon, that puts you around $10. Don't mess with Chesapeake. I mean, I can't tell you what to do, but come on. You mess with things like that. Anyways, let's go over to some stocks in the news, and then we'll wrap this thing up for the day. Stocks in the news. What do we want to cover here? Okay, let's go here. You've got Aaron's back to the 200-day moving average. They said they see sales higher than expected. Amazon, we talked about the price target upgrade there. Gilead Sciences was in the news over the weekend because of AstraZeneca approaching them at a possible merger. Violent stock there. Tesla sold an unbelievable amount of Model 3s in China relative to last month, so looking good for them. Magic number there was 11,905 Model 3s. That is 3 times what they did in April. By the way, good for them, right? Stock's higher by 7%. That looks good. Twitter in the news there. Barron said that they like this stock as a play off the virus there. They think they're going to see more advertising revenue and things like that. And then Zoom, Barron's threw it out there over the weekend. Zoom basically just said, keep in mind, if you buy this stock, you're buying it at 33 times current year revenues. Assuming operational excellence over the rest of the year, you're paying 33 times. If anybody wants to invest in Jazz at 33 times current revenues, hit me up, right? Like, these are insane valuations there. I think that's just incredible. Boeing, I want to talk about this for a second. Another rocket ship here for Boeing, no pun intended, 12% higher on the day. Boeing is now responsible for over 700 points of the Dow rally from down here. So from the low to the high, you've got now pushing over 4,000 points that the Dow has rallied. Over 4,000 points. I'm using futures here, but if you use the Dow, it's over 4,000 points. Boeing accounts for over 700 of those points because of how it's weighted. Goldman Sachs comes in second place there. It had a decent day today, up 1.3%. It accounts for 350 points of the Dow's rally, and then you can go through and play with the rest of them if you like. I found it interesting that Walmart actually was a drag on the Dow. Since the virus lows, Walmart has actually been higher. In fact, made new 52-week highs, but Walmart has been a drag to the tune of about 10 points, not a lot, on the Dow. So I thought that was pretty cool. And lastly, we'll talk about Hertz. What are you guys doing? Hertz up 115% today. Gives you an idea of the excitement of the retail trader out there. You know, this stock filed for bankruptcy. They're going bankrupt. There's no ifs, ands, or buts about it. Their financials have not changed, but the stock is now up over 880%. since they filed for bankruptcy. I just can't believe it. I mean, you just go like, so I'll go public and then file for bankruptcy or something and see what happens there. I mean, just it's incredible how these valued these companies are. But that gives you an idea of the retail traders out there. All right, earnings for the rest of the week here. Tomorrow you've got Signet Jewelers, Tiffany, that'll be an interesting one. After hours, you got Chewy, that's the pet online company there, Five Below, and GameStop. And if you like dividends or have dividend-based funds or whatever that own these stocks, you got Anthem paying out 95 cents. You have Travelers Insurance paying out 85 cents, actually, yeah. And South Jersey paying out 30 cents. Those will be your dividends for tomorrow. I'll take a chance here and try to answer your questions if I can, and then we'll wrap it up for the day. We'll see what we can do. Yeah, funny on the Hertz thing. It just an odd one there. Yep. Hey, Dustin, when the stocks go up without anything special happening on, is there a possibility that someone, no mortal like us, would be buying a lot of shares to give a false expectation? It's momentum, right? There's nothing. We talked about it last week. What's going to cause the markets to go down? Everybody was like, oh my God, when's this market going to stop? That's not the question anymore. When the market's going to stop is going to be what it's going to be. But what is going to actually stop the markets from moving higher? To me, it's going to be extension. It's going to be people getting too excited too fast in the short term. And that's a tough one. That's a tough one, right? You don't want stocks to go too far too fast. Look at Penn National today. Very, very exciting stock for a lot of retail traders. I get the story and everything behind it. It went too far too fast. Analysts came out and said, hey guys, it went too far too fast. It's not worth that right now. It will be at some point, but it's not worth that right now. And because of that, the stock has been falling. You don't want to see that. You want a slow stair-stepping stock. Just give me some slow stair-step. I'll take that all day long. But anyways, that's probably what you got going on. Yeah. If you had to choose one, a boat or a Lambo, I'll go with the boat. I don't want to drive around a Lamborghini. I don't want to do that for. Everybody knows you're broke. Yeah. No, I mean, yeah, you got, hey, on Friday, I'm actually covering on our FinTips video a thematic ETF that's focused on dogs and pets and things like that. We'll break it down, so that may be something to help you learn a little bit there. But it's impressive. Impressive what's going out there. Yeah. Is it time to short stocks? I couldn't blame any single person for wanting or believing that they should have a slight short position. I couldn't blame you. I'm not telling you to do it. I'm not allowed to. But I couldn't blame. If you told me you had a slight short position, I wouldn't argue with you. You know, be it. With people buying Chesapeake, are we even paying attention or just hopping in for momentum? Yeah, it's just a trade. It's just people trading. The same with Hertz. I hope people aren't making significant bets for an investment on those. I think it's just traders out there. Yeah. But that's it. Yeah. What software is this? Right now, it's Thinkorswim. Could be changing that up here soon. But right now, when you look at the screen, you're seeing Thinkorswim, if that's the question. Yeah. You shorted and bought an inverse ETF. Don't buy inverse ETFs. Look up any ETF. Before you play with inverse or leveraged ETFs, do me a favor and just look at the prospectus. It won't take you more than 5 pages to see the big warning on there that says this is not an investment. This is meant to be held overnight. And that's it. They're very specific about that. Yep. I have a hard time with some of those stocks. Yeah, you see how you covering me already. Yeah, I have a hard time with those. I can't figure out how they're going to make any money at the moment. Yep. You think Restoration Hardware, they're moving on some momentum as well. A little far, in my opinion. They've gone a little too far, too fast. Clearly 2 standard deviations above the 50-day, well above that. So it's not a place where it likes to hang out. You got to expect a pullback there. It's a watch list stock, in my opinion. I would look at that and say, you know, if this thing pulls back, I'd be interested. I wouldn't want to chase it. Yeah. How do you determine when a stock is overextended? You could go back a couple minutes and see what we covered there on Apple and Equifax. Be a great way to do it. Right. When Schwab absorbs TD Ameritrade, they did, and they did get approval for that. They've already started that. I don't know anything about that. I've talked to a few advisor friends that use them for their clients, and they haven't mentioned any changes or anything. They're not excited about it, I can tell you that, but it's a shame. Yeah. Yep. You got your own dogs. I like it. Yeah, I don't like that sector, that industry. I just don't like it. I think it's a trade. That's probably the best, like Jim Cramer way that I can say it. Those are trades. They're not investments. They're far from investments. You could take a shot. You can consider it like a lottery ticket. You take a shot with a small piece of what you got, but I wouldn't be aggressive there. Where do you find the up to the minute market news? You feel like you're always buying behind the Fed news jumps in the market. Any platform should offer you news that's fairly close. I don't know that you need it up to the second. If you do, you can buy direct from Reuters or Refinitiv, Thomson Reuters maybe. It's not cheap. There's a reason why I don't use it. Well, it's not cheap. I think you're pushing 18 grand a year at this point with those guys since the merger. Tech would be helpful. If tech got kicking in here, that would push your S&P to the highs. You could at least get back to the highs with that. You can run any number of models to show that. With the support of tech, the large cap tech, your FANG stocks and everything, you're back to those highs, no problem. It's not there yet, obviously, but yeah. Cruise lines, airlines extended in the short term, you'd have to say so. Yeah. Yep. Oh, yeah. What sector is Disney in? Communication services. You're going to look at the well, you can look at any ETF you like, but you'll look at XLC, communication services, which sounds weird, but it's because of their streaming stuff. Yeah. You think we're headed for another bubble? Well, right now, you're right, it'd be a Fed-induced bubble because the easy money policy is what's keeping everything alive here. And I mean, you don't want to fight the Fed. That's what everybody's focused on. Yep. Stock twits, yeah, you could also use them. I don't like stock twits so much because it's just kind of everybody with their opinion. Sometimes you just want to know the news. You form your own opinion. You know what I mean? I don't like that sort of thing. It gets you thinking one way or the other real quick. It's good for sentiment, though. You could use it for sentiment. Yeah. Yep, viruses, that's true. Yeah, I debated putting that in our letter. We're tracking every single state, the number of tests, the number of viruses and everything. I debated putting it in the letter, but I got a little long in the letter this weekend. Cases are up, 10 different states. I mean, even here in Florida, we're on like our 5th day of 1,000 new cases, even after you factor in the fact that we're testing more people, you know, because a lot of people get that wrong. But yeah, I gotcha. What do you think of the financial sector right now? Obviously, momentum strong. Back to the 200-day. You got to respect the overhead resistance until proven otherwise, but that's what you got. Yep. Well, thank you, Swamp Rat. Swamp Rat. Never thought I'd say that. Do you have a projected price, frequency, or subscription site? Yeah, I actually got to put together the page for that. The goal is to share more research, more data, education. We're going to do more posts inside of there as well as videos for you guys. All of our customers will get that for free, of course. I'm thinking like 12, 13 bucks maybe. Like this isn't going to be, like I said, we're not trying to like make millions of dollars. We're just trying to hire a guy. That's it. I'm thinking maybe 12, 13 bucks if that works for everybody, just to make it worth our time to get it in there. It doesn't take too much away from what we're doing. Yeah, I don't have any, you guys know me by now. This is not like, hey, send me $1 million. I'd prefer you open an account, but this helps get a guy, help us developing some more stuff. I'll do the extra work. Yep. Do you think there'll be a drop come the election? I think there will be a drop between now and the election. Yeah, statistically, it would happen twice before the election. There'd be at least a 5% pullback twice before the election, just because of the number of months you have left to go. So statistically, you have to say yes. Right now, I would look very wrong, obviously, by saying that to you. But statistically, if you wanted to price that in, there you go. Oh, yeah. Yep. Promo code DCI. I like it, man. We're talking the same language now. We ever do a stock recommendation subscription? I won't be able to go that far, but I'll promise you to be very clear about the research. Let's put it that way. Be very clear. Without saying, I think you should buy this, we'll be very clear about the research that we share with you. Make a deal with you. Yeah. You ever think we'll offer the app? Yeah, if enough people want to sign up for the subscription, we can hire that developer that just posted a minute ago. Yeah, that's the goal too. We want to do the app. Would be absolutely the goal there. I appreciate you watching. I try not to take too long in these videos here. About 30 minutes seems to do the trick. And I will wish you a great rest of your day. We'll be back tomorrow to do this all over again. Smooth, right? Everything, you notice it? Pretty smooth today. Yeah? Who worked all weekend on this? Hey, anyways, enjoy the rest of your day. Thanks for watching. See you later.
Why should you choose Jazz Wealth as your retirement or long-term investing service? Our portfolios are managed by us, not some faceless mutual fund manager. Our private classes will teach you everything about investing and getting your dough straight. Best of all, our fiduciary standard means your best interest comes before ours.